Okay. All right. Good morning. Good morning. Good morning. Good morning. So I am. Oh, more people are joining us. That's good. Okay. Just wait for a few people to join us. So welcome to the session. Okay. Good. Okay. So this session is obviously planned for just before Christmas, but I thought it'd be good to run a session with capital and capital raising. So, obviously I've been doing this for a long time. So for those that are just joined us, my background's in finance. I have a PhD in this stuff from Cambridge, and I used to run hedge funds. I lived in London for many years. And this is what I do, right? That's what I did, I suppose. And I guess the idea of today's session, I'm going to start off with the first half an hour. And then the two boys from MaxCap is going to jump on. They're going to talk about their fund and how we collaborate. Obviously we have a fund. Our fund is about 150, 170 million, something like that. But obviously, 170 million, to be frank, it's a small fund, right? I have to say, if you look at something like BlackRock or even these guys, right? Now, these guys, just to give you an idea, this is MaxCap. If you look at MaxCap, the reason I know they're the largest fund in Australia, this is, no, I have to register. Oh, I can't see this, damn it. But this is a ranking of the top 50 funds in the world, and you will see that maybe I can do this. I can do Ignito. If I do Ignito, that work, because I think there's a cookie somewhere running. So just 2 seconds. Okay, doesn't matter. Okay, I might have to go the VPN route. Let me go the VPN route. If you don't have VPN, get VPN. Anyway, this will probably work, hopefully. No, all right, doesn't matter. All right. Anyway, so these guys run the largest fund in the country. And on that list, you'll see there's Goldman Sachs, there is BlackRock. BlackRock officially now is the world's largest fund. I can show you how big BlackRock is. BlackRock is just crazy. Manages 9.46 trillion US dollars, and it's just phenomenal. Okay, so I mean, we have a fund. Our fund is, as I said, 150, something like that. So it's not too bad. The purpose of the fund is obviously to lend to developers. And the reason we do that is very simple. Once we lend to developers, we can then get the exit. That's why we have so many projects, right? That's why we have so many projects. Now, these guys, that's going to come on in about half an hour. Their fund size is $4.1 billion, right? So let's start from the very basics. For those people that have never, ever done finance, from the very beginning, what is it? How do we do it? That kind of stuff. Well, first thing, what is a fund? Well, the first thing you got to realize is, when people say who runs the world, is it presidents, prime ministers, that kind of stuff? Actually, the people that run the world are your funds. Why? If I was to look at Apple, the largest shareholders of Apple, you can see the largest shareholders of Apple are fund managers. Fund. Okay. And this company here, the Vanguard Group, one of the largest funds. These are a pension fund, so they obviously invest people's money in super pension. 7.83% of Apple, 6.6% of Apple BlackRock. Berkshire Hathaway, again, this guy's Warren Buffett's fund, 5.96% of Apple, right? And this is huge. This is absolutely huge compared to Tim Cook. Very little, 0.02. Tim Cook's the CEO, by the way. These are very small players. The major shareholders of the world's largest companies are funds. Largest Google shareholders. And this is what I said before. It's just crazy some of these funds, how big they are. And again, this is Google. You can see it's kind of the same people. Vanguard Group, 7.21%. BlackRock, 4.32%. Fidelity, 4.15%. So if you ask me who really runs the world's largest companies, I would say they fund managers, right? Because these people have tremendous power over companies on what they do and how they do it. And they're shareholders, so they can get a seat on the board, they can vote in AGMs and stuff like that, and that's kind of the idea, right? So that's my first point. Fund managers and funds are exceptionally powerful because they can do a lot of things that other people cannot do. And what's a fund? Well, I guess by simple definition, BlackRock, for example, is basically an accumulation of different pools of money. So these pools of money could be, as I said before, pension funds. So these are money invested for retirement. They could be individual high net wealth people, people with a lot of money that want to invest in better return. And you can see our returns are much higher than your average return in a bank. Like if you put your money in Combank, if you look at, I don't know, Combank term deposit or something like that, I mean, at the moment, it's ridiculous, the term deposits. If you look at how much money you're getting paid back, it's rubbish. 0.3% for 12 months. Man, that's crazy. Even at 60 months, you're only getting 0.25%. Even if you pay over 2 million, if you put $2 million in a bank, you get 0.3% return as the interest. That's crazy. We pay 4%, 7%, right? So we pay much higher. And that's the thing, we're able to get more people to invest in our funds because we attract. So our funds are made of primarily very high net wealth people, so very wealthy people with a lot of money. And obviously, people with money have a problem. They want more money, right? And how do they get more money? Well, they invest. And I suppose still investing in Combank and even shares is a bit risky, or Bitcoins or whatever. They're all risky investment assets. They invest in a fund, right? And obviously, this is where the fund idea came about, because if we can get those people to invest in our fund and we can use that money to obviously lend to developers, then we can do something with that. Okay, so that's the first thing. A fund is basically an accumulation of people's money. And I guess the second thing is, how does it work? Well, very easily. So funds have different mandates or different purposes, right? So some funds, for example, invest in stocks, what's called equities. Some funds invest in, there's funds for Bitcoins now, currency, digital currency. There's funds for REITs, like real estate investment trusts. There's funds for anything, right? Our fund's mandate is primarily just development finance. That's it. And how we work is very, very, very simple. So we obviously have people's mandate. They come on board, and they invest money in our products, right? And so what we do is we use the money to invest in developers. And obviously, how we make money is very simple. We're like a bank, right? So we must lend money more than we pay our investors, and in the middle we make a small premium. And obviously there's a few fees we charge, and I guess that's how investors make fees, and that's how funds make money. And how we make money, there's a few types of fees. There's obviously something called the establishment fee. An establishment fee really is just a way to make money, to tell the truth. But we call it an establishment fee because we have to establish the account, that kind of stuff, pay lawyers and all that rubbish. But basically that's generally between 1% to 2%. And then obviously there's sometimes called a line fee, which is basically for managing the accounts. Again, that's another way to make money. And then obviously for you, if you bring in you can do both sides. So you can obviously do the investment side, so bring an investor, or you can bring in a client from the other side, which is a developer, and you can make money on both sides. We pay 20% commission on the brokerage of that particular deal. So for example, if you have a $1 million deal, and we charge a fee of 1.5%, so that's 15,000, you get 20% of 15,000. right? But obviously, some of these deals are much bigger than a million. We're talking 10 million, 20 million, 30 million, right? So that's how funds make money, and that's how you can make money. Okay, I guess that's the basics of a fund. A few other things I want to talk about before the guys jump on is how we collaborate, and I guess how do you make money? Well, very simple. You make money on three things, right? Three different things, three different aspects. So obviously, you can make money on investor introduction. So how that works is basically you have a client that you've sold a house to, or a client you've done the mortgage broking for, and this client, has obviously a lot of money, right? So you don't need a license for this because you're an introducer, you're not a broker, or a fund manager. So you just say, look, Paul or whatever, whoever is looking after you within Oxbridge, I've got a guy who wants to put some money, and I'll kind of explain to him briefly how the funds work. Obviously, they'll ask you, is my money safe? Is this a scam and stuff like that? Well, this fund is safe in two sense. Number one, it's not shares or equities. It doesn't go up or down. This fund is purely for projects. Now, this is a debt fund, a credit fund. So in other words, when we put the money in a project, we take security of the project, usually land, right? So we become what's called a first mortgage, or the first mortgagee. Just like when you go for a mortgage on a house, the bank takes a mortgage over your house. So if you don't pay, the bank takes your house. Very, very similar. If the developer does not pay us, we take their land. So that's the first point, right? So the money, I think, is very safe because we don't land 100% of the purchase price of the land. Obviously, we land, I don't know, 60, 70%, 75% of the purchase price of the land. And that's called the LVR, which of course is safe, because unless the market crashes, if we sell it, we can definitely sell it at a, say, 80%, 20% discount, so 80% of the original price, right? So we get the money back. That's the first thing. The second thing that's safe about the fund is what happens with any deals is we go to a valuer, and the valuer is professionally appointed by us. And these valuers are usually quite big. The reason we need a valuation is very, very simple, is because the document they give us, legally states how much that particular asset's worth. So for example, we got a developer, we lend the money to them, and then the developer says, this land is worth $1 million. We go and get a valuer to come in, and we check that. The valuer says, yes, it is worth $1 million. So we then lend, say, 75% plus 750,000, right? On the basis of that valuation, right? One day, the developer does not pay back the money to us. So what do? We sell it, right? For example, we only sell for 600,000, right? So what we do there is very, very simple. We will then take the valuer to court. Why do we take the valuer to court? Because the valuer said to us, the land is worth $1 million. We only sold it for 600,000. Please cover the difference. And that's why valuers are very, very important, because that's a legal document. That valuation document is a legal document. And they always have very, very big professional indemnity to cover any potential lawsuits. That's another thing about, how these things work, because the piece of paper they give us is a legal document, and we can use that legal document to exercise our rights to get that valuation at $1 million. Okay, so that's the first thing. When people ask you, oh yeah, feel free to ask questions, by the way. Thank you, Venkat. So the first thing I can think of is investor introduction. So obviously, you don't need a license, but we do have what's called a pitch deck. So if you want to, I can certainly put on the resource page, and you can download this. So basically, if you want to make money on this side of the equation, you have a guy, and the money we're looking for is not that big sometimes. Sometimes only 250, $1 million. We're not looking for tens of millions of dollars. Sometimes it's just to make the difference between what we have and what we need, right? So all you have to say is, the money is obviously very, very safe, and the reason why it's safe is because number one, it's secured against an asset, and number two, even if we sell the asset to be less than what we lend it out for, there's always an action against the valuer, and the valuers are usually massive. Egan is a massive valuer. Their professional indemnity is a lot of money, definitely a lot of money. Is there any questions so far? No? We're good? Any questions? JV partners, investors. Okay. We'll talk about it in a second. So the first thing that I can potentially think of, and when the boys come along, Ben and Michael, when they jump on, they will talk about this as well, right? Okay. So the first thing I can think of is definitely investor introduction. So introducing investors to the fund or to our venture. So MaxCap is obviously, as I said, Australia's largest real estate fund. So they do exactly what we do, except their minimum size is 50 million, right? They only do projects over 50 million. We can do project maybe 50, 75, up to 50, 75 million, but these guys, the minimum is 50. So that's crazy. So we don't really compete, because we do 50 and under, they do 50 and over. But certainly you can choose to us, we can choose to them. It doesn't matter. You'll get a fee as well for the introduction fee, as I say, 20% of the value of that commission. So that's something you could do. The second thing I can think of is debt JV deal introductions. And again, this is something that's different. 2 seconds. Okay, this is something that's different. So here, what we do here is we introduce deals to either us or MaxCap, it doesn't matter. And this is probably easier, right? What we do is, obviously, you're looking for developers. You're on the other side of the equation. So both sides have a name. So this is a bit technical. Both sides have a name. The borrowing side is called distribution, because we're literally distributing the money, right? And the other side of the equation of sort of investments or private finance, whatever you call it, is obviously the side that gets the money. So there's two sides. And because we're in the middle, we make the difference. If you want to be involved in distribution, then again, what you have to do is find developers. And there's many developers. And as I said, one of my favorite things to do is to check out our patent, the Airtable patent, and I can see who's doing what. This is my way of finding new clients for the finance and for the development, because we have every single DA in the country. I can find what people are doing. So this is on the Gold Coast, but we've got Melbourne and Brisbane and Sydney, whatever. So I can find, for example, what people are doing. So I can see, this guy is a good example here. This guy recently, June, the 3rd of June, right, 19 something Le Mans Drive, Meme Waters, right? This guy is doing a project. He's doing a 6 townhouse project, right? He's doing a 6 townhouse project. I guess my next job is to find out who owns this land, and obviously who's the director of the company. And we've done that before many times, how to find out company directorships. And next thing I do is I go and approach the person, right? I might, I don't know, give him a call, even knock on his door sometimes and say, look, you're doing a development. What do you guys need money? Do you guys need sales? What do you guys need? And that's always the first thing. And this becomes your client, because, every single developer I've met, no matter how wealthy they are, they still use other people's money, right? It's leverage, because the money is so cheap. Why use your own money when you can use other people's money, right? So every single developer I've met needs financing. So that's the first task, right? So you go and find this guy. And then, for example, this guy tells you, look, to build I've got the land, and that's called acquisition, right? You can have acquisition finance, but I need construction finance. So I need to build a damn thing. And you say, look, problems, how much do you need? What does the architect tell you and stuff like that? The builders told you, the builders told me I need, I don't know, 6 million. Okay, you say no problem. So what you do is you can then introduce that person to us, right? And that's an introduction. How you get paid, again, it's the same thing, 20% commission on the brokerage fee of that deal. So 6 million, the brokerage might be, I don't know, just do a quick calculation. Just a real life example. So the guy says to you, I need 6 million, 6 million construction finance, I'm charging, let's say 1.5%, 20%. So that's 18,000 for just one introduction. You don't have to do anything at all. You just have to say, Paul, or, I've got a few people working the Oxbridge finance team. I've got this guy who needs 6 million construction finance for a townhouse development on Mermaid on the Gold Coast. And then we take it from there, right? You don't have to do a thing. So that's how, I guess that's how it works, right? And the JV, going back to your question, Bankard, is also another possibility. So here's another different type of deal. A JV is a joint venture. So instead of the guy coming in with his or her own land, you're coming in with either financing or land. So traditionally, so for example, you go to this guy here, and he says, look, I actually don't want to do the build myself, but I want someone to come in and do the build and actually, put up the money for the build. And that's a possibility. So you're looking now for a JV partner. And then obviously what we can do is to lend money to a developer or find actually a developer or a builder, usually a builder that comes in, and the builder obviously can borrow money from us as well and use that as a partnership for that development. So obviously when the townhouses are built, when it's sold, so obviously we're trying to get the exclusive for the sale, then the profit is usually split 50-50. Okay, so that's a JV. That's some good questions. Other questions? Minimum loan amount. The minimum I would say is probably $500,000. We don't do things that small, but we only do developers. There's very, very few developers that look at things less than $1 million. Who charges the brokerage fee? We do. We charge the brokerage fee for you if you want it. We don't have to, but obviously if you're coming with a deal, then we have to charge brokerage because there's an introduction fee to be paid, and obviously you get a chunk of that. Any other questions? No. Okay. Okay, so that's the second thing I was thinking of, right? So obviously that's how you make money. You can make money on both sides. Yes, you're a broker, but private finance is a little bit different. So the world of private finance, obviously we have aggregators. We have 2 aggregators we work with, but the aggregation model for private finance is very low brokerage. You don't get much at all, right? If you go direct to a private finance guy like us or MaxCap, you'll get a lot more brokerage, right? The aggregators, firstly, they don't get paid as big brokers as us. Secondly, they will split that brokerage with you. So obviously you get a split of a split. Okay. Should we contact you directly for a deal? Contact support at oxbridge.capital. That's our support address for the capital side of things. There's actually a process online to actually refer clients. Show you how it's done. But we've had quite a few good deals come across. And again, don't forget, it's not just the finance deal that matters. It's actually the control of the sales exit. That's where the real money is, right? The brokerage may get you 18,000, but the commission on the sales may get you, I don't know, $1 million. So that's the difference. But obviously, to get that exclusive, you must be able to do something with the finance. But that's the point. The point of the exercise is not to get you the finance. That's it. To get the finance, but also the project afterwards as well, right? In the resource page, I thought I had a section. I can't find it now, but there's a section. There's a process where you can refer leads and we sign off. It's everything done in writing, so you definitely get paid a commission. But that's kind of the idea, to introduce clients to us and to you. Thirdly, small questions. You don't have my contact. I'll text you shortly, then Kat, my contact. easy. Okay, so that's the second thing I was thinking of for the introductions. Obviously, we can do investor introduction, the debt JV introduction, and also the third thing is project introduction. This is where it gets interesting. So, look, MaxCap and us have entered into an agreement. So this is where it gets really cool. Now, if you look at MaxCap, they're massive. It's just massive. You look at some of the projects they've got, some of the transactions they've done. You know, it's just crazy. Some of the stuff. So we've got this one. All right, this is Melbourne. This one. This is one of the ones that we actually launched. This is a commercial, so it's not really relevant at the moment. This is another residential in Melbourne, New Zealand. We don't care about that for the moment. This one, we know about this one. We haven't actually gone for it yet, but this one. So the idea is, you know, all Chatswood is another one. There's a massive one in Chatswood in Sydney as well. For those people in Sydney interested, this is the key, right? If you can secure or have a relationship with the funding partner, it's more likely you're going to get an exclusive, if not a whole exclusive for the project, but an exclusive allocation on the project. And this is where the real money is to be made, right? Because sometimes we become what's called a junior partner. And a junior partner is a guy that sits behind the senior, right? And it's called a capital stack. And again, you know, if you've got some money in a junior, because you're part of the financing deal, right, you can certainly have some say in how the project is sold, right? Castle Hill's another one. I mean, there's so many, you know, the projects are so many, and they've got more. They've got tons more. They're the largest funder of real estate projects. This one is quite good. This is actually in Brisbane. This one we know, we just launched this recently. This one we're about to launch as well. There's so many stuff in Perth as well. Box Hill is another one. Box Hill, it's a nice one. But that's kind of the idea. That's kind of the idea. But no, you don't have to negotiate with anyone. You have to contact us. We have a relationship with the funder. We're funded ourselves. But obviously, if we're the junior partners or something like that, you know, obviously it helps us secure the exclusives for you. And then obviously once we get the exclusives, you just go for it like as before. Sell the project, because we need people to sell. We need people to sell those projects. Just texting me because I'm running a bit late. Any questions I can answer?
Hey, Paul.
Yeah.
It's Chris.
Hey,
how are you?
Good, man.
So I just wanted to ask you, so these projects, are these do these projects that have gone through MaxCap here, do we have exclusivity for them, or are we master agents for these?
Some could be, yeah. Some could be, 100%. Some could be.
Okay.
It depends. It depends on the relationship, right? I think Michael's just jumped on. This is Michael. You there? Okay, Michael just jumped on. Oh, good. Yes, they could be. So it depends. Like obviously, Michael sent me a deal yesterday, and I got someone very interested in the deal. Obviously, if we become a part of the capital stack, then 100%, 100%. Yeah, and that's kind of been a model. Since day dot. You know, even though our fund is not as big as MaxCap, I think when you have money does talk, man. Money opens doors for you. But as I said, the brokerage, yeah, that's good money, but the real money comes in the sales of that project. As you know, right, Chris, you've been involved in a few projects in Sydney.
Yeah,
right?
I'm getting involved in them. Yeah, and the only thing that's why I was asking about these current ones that are already listed on the transactions. Do you know if we are already listed as master agents with these ones?
So we definitely have our own master agents, and I guess that's something that Michael can talk about, right? Once we get involved in the financing capital stack, then 100%. But I'm gonna welcome Michael, because Michael's just jumped on.
Hey, mate, how are you?
Oh, there we go, man. Looking good. I was just going through some basics of finance, man.
Okay, good. Well, what can you tell me? Fill me in too, please.
Well, no, just some real basics, some real definitions. I don't know if you saw the things I sent across, but basically I was thinking of 3 things that we can collaborate on: the investor, debt JV, project introductions. So I was talking about, obviously in introducing investors to the collaboration.
Sure.
So obviously, we have agents and brokers, and people have, man, it's all contacts, right? Some of these people are extremely wealthy, and obviously, they've got money to park, and not at. I was showing the term deposit at Combank at the moment. It's ridiculous. Look at this, 0.3% per annum for 60 months for $2 million. Man, we can get a better interest, man, right? We can get a much better interest for our investors. And as I said, correct me if I'm wrong, you don't really need a license to introduce an investor, correct? It's just an introduction, right? We're not managing the fund. It's an introduction from a broker or an agent to us, right? So yeah, I was talking about that. I was talking about the fact that we can do JV and debt. So obviously bringing projects as well, because you do need a distribution side to things. So obviously funding different projects. And also thirdly, project introductions. So you go from it, you take it away. Do you want to share anything with us in terms of screens, or are you cool?
Oh, no, look, it's just keep it fairly high level, mate, for the time being, if you like. So it's probably best if I just give you a little bit of background on MaxCap and sort of where we're at. I mean, you've done a great job in trawling through the website there.
Mate, we know some of these projects. We've been working on these projects. I mean, like the Embros, man. We know that. We launched that Cocada. This is Cocada, wasn't it? We launched that 3 weeks ago.
Yep.
Yeah, they had Goldman Sachs on this.
Yep.
For a little while. Yeah, but you go for it, man. This is your session.
So. No, that's all right. Well,
yeah.
Hoping Ben will join us shortly, but I can sort of kick off. So, basically, as you can see there, I mean, MaxCap's been around for 15 years. Started as a brokerage firm, funnily enough, in Melbourne, providing that service for the developers. Then, just as the GFC hit, a chance meeting with Paul Keating actually came about and set a course for institutional investment. So if we sort of fast forward a little bit there, now have discretionary mandates with the likes of AusSuper, CBUS, the Dutch sovereign fund APG, and the American group Apollo Global. So they're alternative asset manager who look after about 450 billion US, have just taken a 50% equity stake in MaxCap. So what do? We provide finance for developers. Our core focus is and has always been commercial real estate debt, and we provide the finance for anything along that capital stack. So whether it's a senior construction lending or if it's a JV, which segues a little bit into the next piece. So MaxCap is made up of various divisions, all operating under the one group, but you've got your investment side, which is the debt side, basically. So working with developers, to basically work out the best source of capital and financing for their development, whether it's a land sub or a medium density, high rise, whatever it might be. We also have our direct investment team, so that's all our JV stuff. So you would have noticed on the MaxCap page there, we've done stuff with Honeycombs. We've got must have 3 or 4 of them at least down Sydney and Melbourne, and there's in excess of 1.6 billion in that pipeline, with over 6 billion in the for the distribution for the investment team, direct. And then on the other side of that is we have distribution. So I personally am a bit of a hybrid. So I spend my time in distribution, chatting with high net worth individuals, family offices, and basically provide debt and investment opportunities for them. And I also deal on the investment side, working with developers to, on their projects, having a look and seeing what we can, if there is something we can do and assist them with. So, the group as a whole, we manage some 4.5 billion with, I think we're up to about 4.5 billion, 12.3 billion total over its 15-year existence across more than 470 transactions. So it is something that the group are really, really proud of. And we are regarded as the number one non-bank lender in the country. So funds under management, the caliber of clients that we have, is indicative in our pipeline. So I guess probably that's quite a high level overview. So if you guys fire away any questions, and I'll certainly do my best to answer them.
I think it was just a few. Do you charge any mandate?
Do we what, sorry?
Oh, do you charge any upfront was the question. Do you have any upfront? I had a few broker question here. Do you charge upfront? What is your fee? That kind of stuff.
Yeah, so and that will vary. So typically we will have an establishment fee, and depending on the type of loan, whether there's a line and management fee, if it's a fully drawn loan, as opposed to progress claims and drawdowns. So it does vary, and of course, obviously with direct investment, it changes. But to answer the question, yes, we will charge an establishment fee. For almost all of our deals. Essentially that's where the company generates its revenue from.
Right. Do you charge an upfront to get the deal done?
Yes. Correct. So what will happen is, in some cases, that establishment fee will be, a part of the loan size. So, if it's a $20 million construction fund and there's a 1%, establishment fee, well, that'll be included in their loan. But some people, again, it just depends on balance sheets and the wants and needs of that particular borrower.
Perfect. Another question here. Do you have a minimum or a maximum of lending?
Yeah, great question. So when we look at construction lending, we typically, as a bit of a rule of thumb, we will say starts at about 20 mil. Obviously, we will assist our developers with land acquisition. So if they've got settlements and things like that, which are obviously by nature going to be typically a lot smaller than that. As an example, we did a $6 million land settlement that on the back of that, once DA had gone through, there was a $24-25 million construction loan on the back of it. So that's the area that we choose to play in. It's what we do really, really well, but it's not a bad guideline. And all the way up, I think our largest one to date is about 350 million that we've written.
Jeez, massive appetite. Good God, that's crazy.
Yeah.
Wow.
And just to be clear on those really large transactions, that will be written through one of our institutional investors, whether it's an Oz Super, CBUS or APG.
You need to, yeah. Do you do syndications?
Do we syndicate?
Mm.
Yeah. So what happens when we say we go and raise funds privately? All those, basically we set up a unit trust. So all the investors take their equitable units in that trust, and that's we just create an SPV for each of those transactions, or alternatively, our investors will invest into one of our funds. So rather than reviewing all our IMs that come through, and look, we would have to do at least 40 or 50 transactions a year. So, if you want to do quite crude round numbers, one a week. But some of our investors are just happy to sit in a fund where the risks, are spread across, anywhere from 15 to 20 deals, depending on which fund that they choose to play in.
Okay, perfect. Are there any other questions for anyone at all? We have a few brokers online as well.
Michael, it's Manny. Do you fund offshore projects?
New Zealand. Yep. So we've got an office in New Zealand. So we've done our first transaction over there earlier this year. But as of yet, we haven't gone into any of the other markets. But the intent of our new partner in Apollo is they've got a large focus on the APAC region, and so when borders open up, goodness gracious, won't that be a treat? So I suspect there'll be some significant appetite to start exploring some of those other currencies.
Like 455 billion under management. Holy mother.
Yeah.
Yeah. Sorry, any other Manny, any other questions?
What about you only fund projects, yeah? Not any other assets like in other industry, for example, refineries like that?
No, I don't. So just an asset that is commercial real estate. That's all we play in.
Good. And your average interest, how much you charge?
Sorry, say that again.
Your interest. What's the average?
Okay. So that again, that varies significantly on things like LVRs, debt coverage, obviously through pre-sales. So it is a sliding scale from, a first mortgage, can be for our borrowers will be 6.5 on the low end, to 8, 9. And then you start slipping in. So if their LVR, if their loan requirements are stretched past 65%, we will then need to obviously offer a secondary B note or mezzanine facility, and that can blend into the fee.
I forgot that's what we come in, you see, because obviously you guys are massive. MaxCap is absolutely huge. But I think certainly for us as Oxbridge Capital, the second or the junior or even mezzanine is where we can definitely play. There's
some attractive, risk-adjusted returns there. It's always secured with something, whether it's obviously first mortgage, a mezzanine, second mortgage, might be sitting behind one of the big banks or sitting behind one of our construction loans. So it does vary, and certainly happy, excuse me, to share with you, Paul, an example of what one of our SPVs look like, just so you can get a bit of a feel. So, excuse me. So what we'll typically do is once we're mandated, legals are done, we'll create a bit of a teaser document. It's never more than, sort of 4 pages, but it sort of just highlights the key things, like this is the site, this is the sponsor, this is the amount, the term, the security. So investors can have a quick look and say, yay, that looks good, or no, I think I'll pass. In the event that they're interested, we will then present them with a more comprehensive IM. You're looking at 32, 34 pages with all the T's and C's, what our fees are, if there's any brokerage fees in there and things like that.
Perfect. Venkat, you had a question? Do you have a microphone? Maybe just type into the chat box so I can see it. Good. Maybe you can walk us through that process, Michael. How do we introduce? So I've got, for example, you gave me a deal yesterday, and I actually spoke to someone in the afternoon. So this investor is one of our investors, and it's only $1 million, so it's not that much. But how do we take it from there? What's the actual logistics, the process involved?
Yeah. So what? Excuse me. A few of our investors are, a buyer, whether it's an accountant or a lawyer. It is in confidence, the information that we send out. But you know, if it's disclosed and we know who, what, when, where, why, that's a lot easier. So on the investor side, happy for you guys to share, and if people want to participate, well, you know, we can certainly move forward from there. On the if you've got a developer that requires funding, which probably moves into your question there, partnerships, how have we operated with other brokers in the past? Everything's fully disclosed. So if, for argument's sake, you have made an introduction, and that could be as much as an email or a phone call, and we jump in, we'll do all the legwork, not a problem. And then we, you know, we'll work out a brokerage fee that comes, you know, out of whether it's our establishment fee or whatever that looks like, and that's, you know, and that obviously varies, but it's all disclosed in our documents, so everybody's fully aware of, you know, who's getting what and where.
Perfect. Yeah, perfect. And what about the investor introduction? How would you do something there?
Yeah, so investor, it's best thing, because so if we use that one yesterday, Paul, as an example, they're not that lucrative, if that makes sense from a brokerage perspective.
No problem.
Only because, you know, the establishment costs and things like that, you know, they're relative. So on that was a $2.75 million mezzanine facility. It's nominal. I mean, there's still something there, and we can certainly have that conversation. Where it's probably more attractive and where we have more flexibility to do stuff is into the fund. So if you've got somebody that's interested in, you know, one of the open or closed end funds, that's easy, because if you look at it from a straight numbers perspective, their money's in for, you know, 2 years, 3 years, 4 years, depending on the amount. Obviously, you know, there's a percent that we make per fund. Well, you know, we can do stuff with that there. So that's a lot easier, to be perfectly honest with you, than the smaller privately syndicated stuff, just because of complexity. And then, you know, like a couple of basis points that you know, you might be chasing for, it might be a deal killer. If that makes sense.
100%.
Size-wise, so
100%. Yeah. Well, we can only make money when you make money. I suppose you make money when you actually distribute that fund, when you actually put the investment in, right?
Correct.
So I guess, and okay, I'll get to that question a bit later. What about projects? So I was thinking, when we're talking about maybe project introductions, that kind of stuff, if we become a junior or something like that, that could work, right, Michael?
Yeah. So do you mean introducing you guys to our developers, to our clients?
Especially if we're involved in the financing side.
Oh, absolutely. Look, if there's well, I mean, that makes sense, right? So if you're being one of your clients, absolutely. I mean, that would be I mean, a lot of our lawyers will do things like that. They'll bring their clients to us knowing that they're going to get the work. We're not going to outsource.
That's it. You know, it's okay. But there's real money in that too. There's massive amounts of money in commissions off the side.
Yeah, and look, I mean, we've obviously like commissions coming back to us. It isn't anything that we're interested in. And I know that, you know, it sounds a little bit crazy, but it just complicates too much. So we're happy to support when required. So if we've got a developer that's, you know, say a Melbourne developer that's come to the Gold Coast and has bought a land subdivision there, and we'll quite often get asked, you know, what valuers do you use? You know, have you got, who are the good real estate agents, all that sort of stuff. So certainly happy to facilitate introductions when requested, that's for sure.
Perfect. Sorry, one question that one of the brokers was asking, this is a very experienced broker from Melbourne, he was asking, do you actually charge any upfront? So what some brokers do, what some capital funds do, they charge an upfront, like $7,500 to get the whole thing moving, because that covers legals. Do you charge that? No, you don't.
No. So only once we're mandated. And look, we cut through to it pretty quickly. So look, if it doesn't stack up, like, we say no to more deals than we say yes to. And that's, you know, the advantage of, you know, being our position there. So no, we're not going to charge to go through a bit of a feasibility. We invest time in due diligence and relationships. So yeah, once that's then mandated, obviously there's costs and things that are associated with all that, but that's all again documented once it gets to that point.
Okay, another question. Sorry, Michael. It's probably the last few. Typical LVRs you guys are looking at the moment.
Oh, is there such a thing?
Do you do 80%?
yeah. Look, we can stretch, to 75% LVR, which I think loan to cost ratio is might get into the 80s. So it just obviously anything past the 65 is no longer considered a senior, just a straight senior debt. There'll need to be a bridge or a stretch facility attached with that. So, and again, our risk team really dive deep into that, and we will. So LVRs aren't always reflective of, say, debt coverage and pre-sales and things like that. So there are quite a few. There are a few, bits and pieces that sometimes influence more than just a LVR.
Absolutely, I agree with that. And obviously construction is a little bit different as well, and pre-sales a little bit different.
Correct.
It's a case-by-case thing, Venkat. I can probably answer that question. Venkat's asking, is it 65% on GRV? Is it pre-sale requirements? Do you need pre-sale requirements on your deals?
Yeah, so it depends. So if we're doing a joint venture, obviously we're in there from the start. So that is prior to that. But that's all part of our risk assessment, basically. So if we look at a project that's in the middle of Surfers Paradise and they're sitting at 30 or 40%, if we're going to take that risk, the interest rate component is going to reflect that, if that makes sense. So if we like the deal, we'll do the best that we can, but we've obviously, our obligation is to our investors that they get fair and safe return. It's one of our probably our shiniest badge, if you will, is that in the 15 years and $12 billion and all those other numbers that were rattled off before, we've never failed to return every cent of interest and principal to our investors. So we take it very, very seriously.
Impressive. Yeah, very, very good. Yeah. I mean, to answer your question, Venkat, I would always get pre-sales. It doesn't matter. Pre-sales, it brings out interest, it makes you look good, it makes developers look good, it makes your funding looks good. I mean, turnaround time is fairly quick, right, Michael? That was one of the questions I came across.
Yeah. So look, ideally, from the time of a term sheet being issued and agreed upon, we will ask for 4 to 6 weeks just to get through the full legal due diligence, go through our investment committee, our risk and the rest of it. So 4 to 6 weeks. I mean, at this time of the year, it's chaotic. We just can't look at anything this side of Christmas here in Queensland. Appreciate that every state has its own office and its own analysts and stuff and the rest of it. So yeah, turnaround times 4 to 6 weeks from being mandated to funds being distributed.
Perfect. All right. Any other questions? I think it's pretty cool. No, all good. Okay. Very, very generously for allowing us to your time today, Michael. That's awesome.
No problem.
Thank you so much. Love looking forward to more deals, man. I'll get that one hopefully done. But we just need a few more documents, but it's all good. Looking great. Excellent.
Okay. Perfect, guys. Well, thank you very much for allowing me to have a chat.
No, thank you for coming. Amazing. All right, we'll catch up soon. Thanks, Michael. Appreciate it very much. Thanks, everyone.
Thank you.
Have a great day, guys. Bye.
Thank you.
Bye. Bye.